The date is June the 21st, and this is Andre O'Connor. We're looking at the Eur USD chart. There are a number of things happening, some causes for concerns based on what happened last week. Last week, the world seemed focused on a head and shoulders formation, which really indicates a reversal of the previous trend. The problem is that the trend that had actually gotten broken was a short-term trend, which is this red line we have here. The longer-term trend is still intact. So for the most part, we're still in an uptrend, right? So although we have a reversal pattern forming here, it's not reversing the major uptrend that we're in, right? Now, I said before that there are some cause for concerns apart from the short-term trend and not the longer-term trend being broken. We're still above our 200-day moving average on the daily chart, as well as the 4-hour chart, which we're actually looking at right now, right? Another cause for concern is that the neckline got broken last week, but as you can see, price did not respect the backside of that neckline, and so we saw price moving above the neckline, which was very disappointing for some traders, right? Now, when this happens, it could be that the market is in the process of forming a falling wedge pattern, which actually indicates some continuation of the longer term trend, right? So although some of us may be positioning for the 1618 expansion level based on what happened here with the head and shoulders formation, we should also be very mindful of the longer term trend line, right? The actual target of the head and shoulder pattern will actually fall at the 1618 level here, but our longer term trend line is above that target, which is a cause for concern. So reversal patterns forming, but it did not form with the break of a major trend. So be very mindful of that if you're considering selling. Another pattern that we're currently looking at, and this is very interesting, is the bearish flag formation that I'm seeing right now, with the flagpole starting from this high and runs to this low, and between these two red lines here we have the flag formation, right? Now the target, based on the measurement of this formation here, the target matches perfectly with the fib target at a 100.0 expansion level. So this could be considered as target 1 for many traders, right? So technically, the targets based on the head and shoulders matches with the 1618 on the fibs. The target of the current bearish flag that I'm looking at matches with the 100.0 expansion level. So things seem technically sound, but we have to be mindful that for the most part we're in an uptrend, and as most experienced traders will tell you, the trend is your friend, and you should possibly avoid trading against it as much as possible. Now, if you're going to be selling a strong break on the flag, I'll encourage you that if the neckline should get broken again, to lock in some profits above your neckline, with the hope that this time around the neckline will provide some support for the trade that you're in and will actually prevent you from getting stopped out. Worst case scenario, you run away with small profits based on the fact that you would have locked in some profits above the neckline. That's my analysis for the Eur USD for now. Stay tuned for further analysis. Thanks.